Tom, I want to get your thoughts on this report and whether this is a bearish indicator right now or whether this is really something that you have to dig through the details and look at the mix of the expected iPhone sales.
Sure. Thanks, Morgan. So the good news is that for the iPhone 14, they should do better than the iPhone 13 to the extent that supply chain challenges, persistent supply chain challenges, prevented Apple from meeting demand for the last line of iPhones. So I think that's something that's working in the favor of the 14. Now, that said, it is a challenging situation for Apple. In particular, we're concerned about the very strong U.S. dollar with more than half their sales outside the U.S. and do think that Apple may have to make multiple adjustments to their prices in local currency for the iPhone 14. I think the UK, Europe, Japan as an example. The good news, though, is that their core consumer has shown a willingness to devote a larger percentage of a smaller amount of discretionary income on Apple's products. So I think at the end of the day, the company and the stock will be more than okay.
So when I see shares of Apple down 4% right now, leading the NASDAQ lower as well, we're at $145. Do you stick to your buy rating and your price target, or are you rethinking that right now?
I definitely stick to it. And the other reason that I think about why to remain bullish on Apple over the next 12 to 18-month period is the company still generates a lot of significant free cash flow and uses billions of dollars of that free cash flow to buy back its own stock. So I do think that despite the challenges, in particular the strong U.S. dollar and concerns about global recession, I think the stock is still compelling here for the reasons I've outlined.
Just to broaden this out a little bit beyond Apple, I mean, just looking at your coverage universe in general, whether it's the strong dollar, whether it's waning consumer confidence that we could potentially see, where would you expect to see cracks, if you expect to see cracks in consumer spending first?
Sure. So if you look at my coverage list, which has a lot of e-commerce names, it's really been a challenging time for those stocks. So as far as where you're going to see cracks, I think you're going to see cracks in some of the more discretionary spending areas. What you're seeing now is a lot of consumers engaging in revenge travel to the extent that we were all cooped up because of COVID and appreciated the opportunity to get out of the house, things of that nature. Historically, travel is an area where you see a pullback in spend. So I think that some of the more discretionary consumer spending environment or focused companies, that's where they could see a lot of pressure.
Okay. Tom Forte, thanks for joining us today.
Thank you.